The hash rate of Bitcoin refers to how much processing and computing power mining contributes to the network. A hash is a fixed-length alphanumeric code that can represent any length of text, including messages and data. The basis for Bitcoin and many other cryptocurrencies is blockchain technology. The blocks that make up the Bitcoin network are linked together in a chain. Similar to files, blocks contain details about the most recent transactions that took place across the network. Today's video is about the Bitcoin hash rate and why does it matter. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. So, watch this video till the end and hit the subscribe button and click on the bell icon to get notifications for our future videos. So, let's begin the video. Because they operate like data files, smaller blocks take less processing power to validate, or vice versa. In this case, hashing is involved. Block integrity verification is known as hashing, and participants in the network or hashing receive BTC as payment. What does hash rate signify for cryptocurrency investors and miners, then? Individual miners may be able to predict their profitability by calculating their hash rate. However, because cryptocurrencies are mined using a variety of mining apparatus, each machine's hash rate varies. Since mining requires variable amounts of processing power, memory, and speed, the network hash rate rises when mining equipment is updated, and vice versa. However, a more robust network does not always translate to BTC being mined more quickly because the network is set up to release a certain amount of Bitcoin at a time. Changes in hashing power have an effect on the number of miners in the network, the difficulty of the mining, and ultimately the profitability of the miners. Additionally, as more miners join the network, it requires more guesses per second to solve the challenging mathematical equation and obtain the block reward, increasing the difficulty of mining. As a result, as the Bitcoin network becomes more challenging, the hash rate increases. For cryptocurrency investors, the hash rate is an essential gauge of how secure a cryptocurrency's proof-of-work network may be against hackers. However, as the hash rate rises, network assaults become more costly and difficult. Why is hash rate important? The hash rate is a key sign of a blockchain network strength, specifically its security. So what happens if the hash rate of Bitcoin rises? The network's overall computational power is high, indicating that it is challenging for malicious actors to tamper with the network, and the hash rate increases as more machines are dedicated by legitimate miners to discovering the next block. However, if the network's hash rate dropped, the majority hash rate controller may undo his payments by rearranging them, causing problems with double spending. What transpires, then, if Bitcoin's hash rate falls? Due to the low cost of a 51% assault, the network becomes more vulnerable to hackers and crypto heists as hash rates drop. A reduced hash rate also makes cryptocurrencies less decentralized, which poses a significant danger to cryptocurrency investors. If the hash rate abruptly falls, crypto platforms could halt trading or delist a coin to protect its users from losing money. So, is a network security indicated well by a high hash rate? A higher hash rate is regarded to be better for the general security and stability of the blockchain network, similar to the majority of PoW cryptocurrencies, as it means more energy costs, more miners, and more time are required to take over the network. How does Bitcoin's hash rate work? One of the methods through which Bitcoin calculates its hash rate is the SHA-256 cryptographic hashing function, which transforms any input data into a 256-bit string, the hash. The one-way nature of this function makes it easy to extract the hash from an input but difficult to do the opposite. A hash rate is a measurement of how many calculations can be performed per second and can be expressed in billions, trillions, quadrillions, and quintillions. 1 billion estimations can be made each second, for instance, if the hash rate is 1 BH/s. But how is the hash rate of Bitcoin calculated? The hash rate of BTC is measured in exahashes per second, EH/s, which is equivalent to 1 quintillion hashes. The general network hash rate can be generally determined by comparing the average amount of time between blocks that are mined with the network difficulty at that specific moment. How difficult is mining, then? The difficulty of generating a hash that is less than the intended hash, which is done by decreasing the numerical value of the hashed block header, is referred to as the mining challenge. Every 10 minutes, a new block of Bitcoin is discovered on average. However, the difficulty increases or lowers depending on how frequently BTC is discovered compared to the average period. It is also crucial to remember that after 2016 blocks have been mined, the mining difficulty on the Bitcoin network automatically changes. Therefore, the difficulty can be changed upward or downward based on the quantity of miners and their combined hashing power in the mining network. So, what is the hash rate of Bitcoin right now? Although the precise hashing power of Bitcoin is unknown, the quantity of blocks currently being mined and the degree of block difficulty can be used to make assumptions about it. So, how can the hash rate of Bitcoin be checked? As of September 25, 2022, Bitcoin's hash rate was estimated by blockchain.com to be 224.383 mth/s. If you are still watching this video, don't forget to hit the like button and share your thoughts in the comment section below. If you haven't subscribed to the channel yet, please subscribe, as that motivates us to bring more videos like this for you.
May the spirit of Christmas infuse your life and that of your family members with hope, positivity, and joy. Merry Christmas and a Happy New Year!
How does the hash rate affect Bitcoin price? Computational power, mining profitability, and network difficulty are the primary determinants of Bitcoin's price. The hash rate tracks the price since miners get paid in Bitcoin while paying expenses in local currencies. Nevertheless, the value of the Bitcoin network increases with the amount of computing power it uses. Additionally, sensible miners will only mine Bitcoin if it is lucrative, which implies that any other cryptocurrency with no demand would have no value and that miners would divert their efforts to another cryptocurrency. Additionally, the total mining power can be substituted with the network difficulty. The algorithm that controls the Bitcoin network explicitly supports this premise. Thus difficulty will change to compensate for falling or, in the opposite case, to lessen the effects of increasing mining power. Bitcoin price changes are important for more than just speculative reasons. They also have an impact on how the network uses energy and how miners, who power the infrastructure, will operate in the future. A long-held misconception is that the price of BTC and the hash rate, or the total amount of computations made by Bitcoin miners, are linked. The level of effort put forth by a manufacturer in creating a good or service has little influence on the price consumers pay, despite the fact that manufacturers are price takers in markets that are competitive. On the other hand, given the small number of mining pool operators who may coordinate their activities to influence the market price, this might not be the case for the Bitcoin market. Additionally, the rigidity of the Bitcoin supply and the fierce competition in the mining sector could influence miners' behavior. What are your thoughts on the importance of Bitcoin hash rate? Share your thoughts in the comment section below to let us know. See you in the next video. Until then, take care and stay fit in health and wealth.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.